Welcome everyone, I'm Pat Mitchell. Today we are going to be discussing volume in detail. I'm going to be pointing out volume profiles, how to use volume in your day trading. I'm also going to be showing you a nice little trap for volume that you can keep an eye on so then you never get dumped on in a long again. So let's get into the charts and let's start discussing volume. One sec. Okay, so we have SPY. That's what we're going to be using for our example. It actually presented a really nice trap opportunity that I had pointed out that this is a trap. Don't go long. It's about to wash out, and it did. Sometimes that can look like magic, but when you actually understand how to use these indicators, and I don't advise using a bunch of indicators. That's why you see very few on my charts. It doesn't look like some sort of crazy Excel sketch. It is just very simple stuff. Use a couple moving averages, the VWAP, and the VWAP. A lot of people screw up. I should do a revised video on VWAP. Let me know in the comment section below if you want me to. If I get enough, that will be my next video that I will produce. I will go in depth on that. That will absolutely save your ass. So let's first discuss volume on the most basic level. Volume is used as an indicator to basically show you how many shares or contracts, if you're trading options or futures, are involved in that specific time frame. So that 1 minute candle. I use the 1 minute chart because it gives me the best view of the action. 3 minute charts, 5 minute charts, 10 minute charts, whatever. I prefer the 1 minute. I get my members to use the 1 minute chart as well, and the daily chart. So we can look at volume two ways. We can look at it on the daily chart and the intraday chart. We're going to talk briefly about the daily chart first. So let's get into that. So what we have here, and I'm going to close this off. This is the daily chart, and down here are our volume bars. This white line that you see is just the simple moving average 50. It just lets you know over the course of 50 trading days what the average is. Now you can use the 100, you can use the 20, it doesn't matter. As long as we have a base layer level of average, what is our average, that kind of gets us started. So I'll just give you guys a little bit of an example. So let's take a look right at lows here of this dip. Now you're going to see that it is a red candle signaling that most of that volume was on the sell side. That's okay. It's a little bit important. That's not something we're going to cover today because that's starting to get a little more advanced. And we're going to start where you guys should be starting, at the beginning to novice level of volume indicator. So on this here, we want to make sure at dips, at lows, we have volume. Do we have volume? Hell yeah. We've got about probably 2.5, 3 times the average volume on that day. That's huge. That is massive amounts of volume. So that tells me that the bottom is in. Why does that tell me that the bottom is in? Okay. Well, we have to remember that when we have a volume bar of 150 million shares traded, that is not retail. Okay, retail doesn't have the ability on SPY, right? Because we can pull up a quick calculator here. So if we have 150 million, right? That's how many shares we have, times about $520 per share. That's how much money is in that day. Okay, so does retail have access to $78 billion? No, that is institutional money. Sure, there is some retail money in there. I'm sure a small portion of this is retail. But once you actually break down how much money is involved in one single day on one of these single stocks, you understand that, especially on a massive volume day, that is institutions. Institutions have the ability to move the markets. For the most part, retail does not. Keep that in mind. That's important moving forward. So let's say on this day on the bottom, right? So this exact day, this volume candle did not look like that. Okay. Now I'm just going to draw a very quick volume candle here. and let's say it looked more like this. And it was just barely touching average volume. Would you be more inclined or less inclined to buy that dip? Well, you should be less inclined because that tells me that that volume has not flushed out yet. Now, there are exceptions to that rule we don't need to get into. Again, that's more advanced, and I can do an advanced volume class for you guys as well. But that's how you should be looking at volume on specific days. If we are looking at highs or lows, that should tell you. Like now, let's go up here. Let's say on this day, this candle broke. Okay. Well, if you take a look at the volume on this day, if that candle broke, it will be a lot of volume. Why? Because of shorts getting squeezed. Again, people are not buying up here. That all has to do with shorts getting squeezed. Institutional traders will not buy at highs. They only buy at lows. You understand? So it lets you know now that we kind of have an understanding of where the volume is and why it does what it does, you kind of understand what can then happen next. Okay. Is it an area to squeeze those shorts? Yes. Did we have volume there? Now, on this squeeze day, right? So on this day here, if you had a volume candle that looked like this, like a lot, like a crazy amount of volume because it broke, that tells me that there are a lot of shorts that got stopped out. Okay. So that creates a lot of fake buying pressure. Now, I don't want to go down this rabbit hole too much because that's a whole thing. But what I'm trying to show you is if it already blew out all of that volume, this squeeze probably isn't going to continue. If you had, instead of this volume candle, you had on that breakage something like this, and it's above average volume, but it's not super crazy, then I would say that this here is probably going to happen. When you have that little bit of volume, that tells me that shorts have not squeezed out yet. So therefore, we will get a continuation in the squeeze. If it is a large amount of volume, they have already been squeezed. So you kind of have to think that one step ahead in regards to volume on the daily chart. Okay. So the daily chart, I probably should do a full in-depth video on. Again, let me know in the comment section if that's something that you would like me to do. So let's clear up all of these drawings and now go into, I wouldn't say the most important part, but what I really would like to cover today is more so intraday volume and how to really read volume profiles and everything else. So when we have a chart, let's say that looks like this, and I'm going to draw a chart for you here first. Let me actually move this over. So let's say we have a very typical chart that is trending up. Now I'm going to draw out what this volume profile should look like in a healthy day. Okay. Now I'm going to do my best to draw this quickly for you guys, so hang tight. Now on the way up, it should just be small, and I'm going to skip ahead a little bit. I'm not going to draw out each volume bar. Okay. So as we're coming up and it's starting to rise up, you're definitely going to have more volume. Okay. As we start getting, and let's say there is a range right here. Okay. Some sort of previous range here. That's a level. Once it breaks that, you're going to have an increase in volume, and now shorts are getting squeezed, and that's how it gets carried up. So these volume bars on the way up are going to be, for the most part, fairly normal, but it's still ascending. Now, once we continue to squeeze, what you're going to look for, and this is the important part, you see how it's ascending on the way up? So far we have an ascending trend of this volume. And I'm going to continue on here. Sorry, I know these aren't the greatest volume bars. Okay, now we're starting to get above that trend. You see how this trend now has broke, right? So now we are above normal. You understand? Okay, so normal, 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 normal into trend. Once we break that, we're starting to blow off. We're starting to blow off. We're starting to get a little ahead of ourselves. So what will happen next is we will most likely have 1 or 2 volume bars left that produce over that trend, and it'll start increasing. Once you see this and we start getting to the top now, right? We're right at this top, right at this peak. What you're going to see for signs is this. And then you'll consolidate for 1 or 2, maybe a little bit less. And that's telling me right here that the top is in. So we are now looking at right here. Okay. So it comes up, breaks this, we start rising, right? Because that was normal. If this is our average volume, I'm talking about trend on this. We start getting over that little trend, starting to get a little crazy. Once you see that get below trend, and it'll happen fast, within 1 candle, you'll notice it. That's generally the top. Now, I'm not saying it always is. Remember, volume is only one indicator. There's also price action that we need to watch. But speaking about volume, generally speaking, that is starting to get toppy. Okay, we can start looking if there is a level here, or maybe the level's even a little bit above. Okay, those are brick walls. Levels, technicals are brick walls. So we know there's a brick wall there. Volume's tapering off. The shorts are stopping getting squeezed. There's no more buying. Now it needs to pull back. And where does it pull back to? Right into natural. Remember this level? This is a support level or a resistance level. It is a technical level. So it pulls back into there. So on the way down, you are going to have the same thing, but opposite. So once you have this trend coming down and you got one that's real low, it's probably getting to be the bottom of that pullback. Now you don't want to execute that low volume, not like here on the short. What you want to do is you want to start seeing volume starting to come back in right in this area, or you can buy that technical level. Okay, personally, I just execute that technical level. But on this, because this is a volume lesson, this is what I'm looking for. I want to start seeing it rise a little bit. I need to start seeing signs that people are buying this entry point, this technical level. So now you're going to start seeing that, and then you're going to have a repeat of this. Okay. It's not going to be as clean as I've drawn, where it's like a perfect trend and everything else. There's going to be variables, and that's where experience comes in. Okay, so this is what I've just drawn out here. And then as it comes up, once it breaks this, that's the squeeze. You'll get a squeeze because all of the shorts that attack this, and then it'll start squeezing up, and then same thing. Okay, now we're getting to the top. I don't want to draw anymore. There we go. Now it starts tapering off. Volume's tapering off, right? Right up here. And then you're going to start noticing volume drop off down to here. And then as it starts coming out of this base right here, you see there's that quick little level. You got a volume base. Once it gets above that, that's where you're going to get the spike up in volume. And then again, it's going to do this until it gets to here. And once it gets to there, you're going to have that squeeze. Now, maybe not that much volume, but you understand what I'm trying to show you here, right? Same thing. And then it's going to do this, and it's going to consolidate. And then it'll start tapering down. You will see this over and over and over again. This is how you use volume, okay? Now, there's a lot more to it. This is very basic, but I'm showing you this is how you watch the chart and you take a look at your volume, okay? So now I'm going to share with you a little trap. And this is really interesting, something that happened yesterday. Before we do that, I need to get you guys, because about 50% of you, 60% of you that watch my videos are not subscribed. Please subscribe. You're watching the content. That's all I ask. It's not a big deal. This is free content. Ain't nothing free in life. Just subscribe. Thanks. I appreciate it. So now let's get back into this. I'm going to talk about a trap. And you got to remember, because this here is the opening candle. Okay. And then this is the morning session. Right here was the previous close area. Okay. There was support there. So it's consolidating here, right? And it's holding, and it's looking at the time, not right now, because it's kind of after the fact, but at the time it looked like it was about to shoot up. Okay. It didn't do that. Now, I was in long, and I put my recap up on this day. So September 12th, recap for September 12th. You can go take a look at this. So where we dip down, pop up, pull back. See how it's kind of that higher low? It's a setup. That is a setup. That is a traditional setup. Right here on this candle now, you see that hammer candle? Another retail bullshit entry signal. Hammer candle. That right there is a signal for you to go long, because that looks very strong. It looks like it's getting sucked up. Okay. It looks like it is a confirmation trade is what it looks like. Now, if you're not following this, what I would suggest is go back into my YouTube video lesson library and just go devour my education. It'll get you caught up. So that's what people look for to go long. Dumb money retail will be all over that candle. That's where I got out of my long. As soon as it came back up, I was then out. This thing is about to collapse. And that's why, right there, that candle tells me everything I need to know. Why? Why does it? Well, I'm going to get rid of this, and we're going to take a look at this candle. Look at the volume. Way under average. Okay, you see how small that volume is? Very small. That small amount of volume there tells me it is a trap. So why does it tell me that it's a trap? Because you have to remember who we are up against, who our opponents are, because everything is a game, right? We have opponents. We are up against somebody or something. We are up against the stock market. Well, who has more stroke in the stock market? Retail traders or institutional traders? Institutional traders. What do we all regurgitate and say all the time? The stock market's rigged. Then believe it, because it is. They set this up for retail because they know that dumb money retail traders trade setup, not strategy. And most of the time, 99.9% of all retail traders have no education, and they lack knowledge and understanding of what's actually going on. So they exploit that. They exploit us on a daily basis. But I love that, because I can see their traps. Their trap right there that looks like a beautiful place to buy, because they know retail traders don't actually look at volume. They don't know how to use any of these indicators, including VWAP, including moving averages, and most certainly volume. Every retail trader will have volume on their charts, but they do not know how to use it. So they know this. They know this. And they will produce a candle like that, making it a buy signal. Why? Because it's a hammer candle into support. It looks very bullish. All of these bullshit educators are going to try and get you to buy like their candle setups and all this bullshit. It's garbage. It doesn't work. Okay. In fact, they use it against us. So when we understand that, most people that are going long, I am getting out of my long position and now flipping short, which I did. So on this, and I was in on cues on the short and absolutely dominated that, just under $12,000 on this trade. Exact same trade. I can show you here, cues. So Q's exact same thing. Very strong chart. Very strong chart. Okay, it looks like it's about to take off. And what does it do? We get speed right then and there. Okay, now this doesn't look like too much, but it is. That's 2.5 points. 2.5 points in a few minutes. Now, on the option side of things, it was a monstrous trade, folks. So why did we get so much speed in here? Why did it come down so hard and fast? Because of this. Longs that got trapped. So why do they trap longs? They need to create liquidity. What was down here at this level, right in this area? The moving averages. We had moving average support right there, folks, the 9 and the 5. That's where institutional traders will buy. They will wait for proper price points. Why do they wait for moving averages? It's not because it's a moving average. It's because that is an average price for that time frame. That's why. So they wait, they trap longs, they will not buy, and it looks like it's about to rip. Looks like retail is about to buy this and push it up. They don't want that. Institutional traders do not want that. They need to drive it down to a lower price point. So they create a trap with this candle setup, right? The hammer candle setup looks real strong, and then they will wash it out. They will break it. They spend $1 million to make 10. You understand? That's how they do it. So they create a drop, and then all of the retail traders that bought long up here, they get washed out and they scoop up all of that liquidity, and then it comes up. Now, they pull this trap constantly, day in and day out. That's what they're doing right now. Okay. Now, you got to remember as well, it's part of the daily chart setup as well. We've had a nice pullback. Now, I believe that it should still come down a little bit further, but there was a sufficient pullback in the daily chart, and this is where institutional traders will start to buy. If you take a look at this right here on this day, not this day that we're looking at right now, but this day here, that's how it washed out like that. They created yet another trap. This is what they do, and it's the almost the exact same setup. It's just a slightly different. It's something that I went over in the mentoring live class last 3 weeks in a row, discussing this in great detail. And that's why we are absolutely crushing and dominating this market. So that's the volume lesson for today. And if any of this went over your heads, please just rewatch the video. That's all you got to do. Watch the video until you actually soak this information in, because this information, I'm telling you, is actually what you need to know. So on that note, folks, if you want to learn how to become a successful, consistent day trader, and you want access to even higher education than what I'm giving you for free, remember, this is just the free stuff, guys. Come to tricktrades.com. and make sure to like and subscribe. And if you really like the video, share it, send it off. Okay, guys, have a good one.